Hey guys and gals, Greg Silverman here, CIO, Chief Investment Officer. We've got a few series that I want to make you aware of. We've got our CIOs and Bow Ties, which is a series that I do with a colleague of mine, David Crook. And you can catch some previous episodes in our YouTube channel. Please subscribe. It's free to subscribe and check it out. We also do this Come Learn With Me segment, which is basically we use a bit of AI, machine learning to determine some of the more popular articles that we curate. And then we go through it together with you. We'll read through it together. We'll highlight the points that are pertinent. We'll summarize the highlights as well, so you don't have to listen or even read the articles. So this one's nice. This one's another interesting one that percolated up this past week. Exclusive. US slows down oil and gas mergers sources. Okay, let's see what that's about. So that's kind of interesting, right? Especially with energy prices at all-time highs, or well, very high, multi-year highs, let's say. Gas flaring, dust blows around a crude oil pump jack and flare burning excess gas at a drill pad in the Permian Basin in Loving County, Texas. Yeah, I've been there. Fascinating. Okay. US antitrust regulators have extended the approval process for at least 5 oil and gas mergers and acquisitions in the last 3 months. As President Joe Biden's administration scrutinizes deals in a bid to tackle soaring energy prices, according to regulatory filings and corporate lawyers. The slowdown comes amid growing pressure on policymakers to respond to consumer angst over skyrocketing retail gasoline prices as US crude futures hit multi-year highs. There you go. The White House has been calling US oil and gas producers to ask how they can help lower prices. Okay, that's like asking the fox not to go into the henhouse, right? The move is also emblematic of a new push by the Federal Trade Commission to protect consumers, workers, the environment, and society at large. Under its new chair, Lena Khan, the antitrust regulator has taken a tougher stance on deals ranging from technology to healthcare. I would have instinctively thought it was an environmental issue. Such scrutiny is rare in oil and gas sector, where deals typically sail past regulators. More than a dozen industry sources, including lawyers and bankers advising on energy deals, said in an interview. This is because these companies sell their output to global market, and regional consolidation has no impact on energy prices dictated by supply and demand worldwide. Right, that's what I would have thought. Maureen Olhausen, chair of antitrust and competition law at Baker Botts LLP, who served as acting FTC chair from January 2017 until April 2018 under the previous Trump administration, called the scrutiny unprecedented. Even though previous Democratic FTC commissioners wanted active enforcement, the industry was told what the standards were, deals got reviewed, and things moved along. This is really different, Olhausen said. I believe the FTC chair effectively would like to deter mergers. Ain't that interesting? An FTC spokesman declined to comment. The FTC is subjecting more deals to so-called second requests, seeking additional information and documents, the deal advisors said, and the filings show. Second requests can delay regulatory clearance of deals by several months. I am aware of 2 mergers in the last couple of months where FTC staff did not see a need to issue a second request but were overruled by their management. Said Darren Tucker, chair of the antitrust practice at law firm Vinson and Elkins LLP. He declined to name the 2 deals. Among the proposed transactions that received second requests in September were Holy Frontier Corp, $2.6 billion purchase of Sinclair Oil, and Vertex Energy Inc.'s $140 million sale of motor oil collection and recycling assets to Safety Clean Systems Inc., the regulatory filing show. Private equity firm NCAP Investments proposed $1.5 billion acquisition of oil and gas producer EP Energy, also received a second request in recent weeks, according to people familiar with the matter. NCAP and EP Energy did not respond to comments. Sources indicate that there were other transactions which have received second requests in recent weeks, but declined to identify them. Second requests involving oil and gas producers are rare, and it is more common for the FTC to scrutinize deals involving pipeline and gas stations. Pipeline operator Energy Transfer LP said in May it received a second request on its proposed $7.2 billion takeover of Enable Midstream Partners. Deal-making risks. The FTC scrutiny threatens to put the brakes on deal-making in the oil patch, which has already dropped to $18.5 billion of mergers and acquisitions between U.S. oil and gas producers in the third quarter, down from $33.4 billion in the second quarter, according to data analytics firm Enverus. Let's have a look. Bearing in mind that we've had a substantial drop in the price of energy prices prior. Let's pick okay. The White House has been public with its request for the FTC to act as the reopening of economies around the world in the aftermath of the COVID-19 pandemic drives up energy consumption. Brian Deese, Director of National Economic Council, wrote to FTC Chair Khan in August, asking her to investigate soaring prices. Khan responded that the FTC will scrutinize consolidation among gas station operators, but also look at deal-making in the energy industry more broadly. The Biden White House has already irked the oil and gas industry by making climate change a priority in its administrative agenda. It temporarily halted the issuance of new leases for drilling on federal land and has proposed to end some fossil fuel subsidies. Energy companies argue these moves will push up energy costs. To be sure, it is not clear whether the FTC will seek to block any of the energy deals it has subjected to second requests. The regulator has not challenged a major merger of oil and gas producers since BP's $27 billion acquisition of Atlantic Richfield in 2000. It sued to block the merger and only agreed to drop its objections after BP offered it to divest oil production acreage in Alaska. A major test for the FTC will be ConocoPhillips' proposed $9.5 billion acquisition of Royal Dutch Shell Permian Basin assets. It was announced last month, and any FTC second request would be made in the coming weeks. Shelley and Concord declined to comment. So there you have it, folks. So definitely more scrutiny going on in the energy patch. We'll see what comes of it. Interesting to percolate it up. So thank you for that. I appreciate everyone who looked at this and voted it up or down. And interesting. We'll store that away, and we'll see what happens to energy prices going forward. This is your CIO, Greg Silverman, out for now.